Forex Daybreak podcast, where we trade the Forex market with you. Entry, target, exit, and stop loss levels are covered when we walk you through every trade made in the show. 5% of Forex traders are profitable, and you can be among the winners. If you wish to find out profitable trade signals in the Forex market, Forex Daybreak is the show for you. Now, let's begin today's episode.
Good morning and welcome to episode 84. Forex pairs in this episode are EURUSD. We are trying to find out if we are dealing with a smaller correction or has the trend already turned down. Pound dollar, the decline is expected to continue here. We have a sell stop waiting to be triggered to the downside. And pound yen, same here, the decline is expected to continue. We have targeted our trade to the 100% Fibonacci expansion level at 181.7. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Okay, let's begin with EURUSD. So yesterday, a little bit of decline, but nothing much happened. We are almost back in the same position we started yesterday. 108.515 is now the price. The decline from the high of the fourth wave, around 110, is not looking impulsive. So perhaps we are still forming the minus wave 4 correction. I have labeled it as ended on the peak, the high we made on Thursday when the ECB rate cut a bond buying program extension thing was released, and price has since declined a little bit over 100 pip, maybe 160, 170 pip. Decline has been seen, but this decline has been quite weak, and perhaps we are forming a B wave of this minus wave 4 correction. There is of course next week the highly anticipated FOMC meeting. Market participants and mainstream economists are expecting a rate hike. I don't think there's going to be any rate hikes. I think there's going to be same rhetoric, same excuses, same data dependency that has been the case for this year and also a better part of last year as well. So I don't think they are going to raise rates, and I think my view of the US dollar and this pair EURUSD is that Euro is going to strengthen very much going into the future. But I think the reason dollar is getting stronger going forward is not the fact that Fed is hiking interest rates, but the fact that US economy is heading deeper into recessions, because the data that has come out almost the whole year of 2015 has been very weak. Almost all of the data except the employment figures have been very, very weak, and they are on recession levels at the moment. I'm not going to go through any economic data at this episode, but if you take a look at only maybe a couple of months, 3-4 months, if you go back and look at the data, it is very, very weak. And I think next year is going to be the same. The numbers are getting weaker and weaker, and at some point the mainstream media also picks up this fact, and they are going to go into panic mode, and this is when stuff starts to happen in the markets, in currency markets, in equity markets, bond markets. So I think next year is going to be a highly volatile year and the start of very big, deep recession in US and also in most of the countries are in a similar situation. United Kingdom is bankrupt. Japan is bankrupt. China is heading into recession. Europe has been in a recession for, well, you could say 6-7 years even. So it is not looking good if you forget all of the hype from the media and look at clear facts. This is evident, has been evident for a while now. So this is the reason I think dollar is going to strengthen. If you take a look at the charts back in 2008, 2009, the dollar got stronger and stronger in the deep recession. So I think this is going to be the case also. When there's deflationary cycle going on, dollar is going to get stronger. For a while, I think maybe a year or so, maybe even longer than that, we are going to see strengthening dollar against almost all of the pairs. So that's the larger picture. Now let's get on to the smaller scale. 4-hour chart of EURUSD. Is this what you're looking at? So this is looking corrective, the decline, and I would say we are going to get one larger move to the upside based on this price action right now. So I'm not going to enter any trades into this pair right now. If we see a strong move downwards, we can actually draw it here. So if we start to see an impulsive structure, a 5-wave move, and then a 3-wave pullback, then we can expect more downside and the continuation of the larger downtrend. This is my count at the moment, my preferred view, but the price action is not supporting this view at the moment. Of course, there is possibility that we are forming now just a slower first wave of the next decline and can expect more downside. But at this point, I'm not going to enter any trades. Once we see some structure, if we see a 5-wave sequence, 5-wave structure, the downside, then we are more than likely going to see more downside after that. So 5-wave structure, the downside, 3-wave pullback, and then this is a good point to start trading this pair again to the downside. All right, let's see pound dollar. So we had a trade here yesterday. I closed it last evening and I have now entered a new trade on this pair. So quite the same than yesterday. Sell stop order at 1504, stop loss 1508, take profit 149.06. Those are the levels for the trade today. So very similar trade than yesterday. I didn't want to leave the trade running through the night. The price action was a little bit suspect, but the view has stayed the same. I'm expecting more downside and a continuation of the larger downtrend. And the first target, let's draw it here. So from the high, we can see maybe waves 1 and 2 now, perhaps forming wave 3. We can expect a sideways wave 4, and then perhaps the 5th wave will end somewhere near 149 levels. This is my expectation for this pair, so more downside. And once we see a clear break of the trend line I have here, which is a support line connecting the lows of the previous leading diagonal formation, that was wave 1. Once we see a clear break below this line and a close below that line, so that line starts to act as a resistance level, this is when we have a strong signal that the larger move or the larger trend is going to be to the downside. We already had a move below that line last week before that ECB release, but that swift move to the upside quickly got us back to 151 levels. So we are back now at the same support line or above the support line, and I would like to see a clear break of that support line, and this would be a strong signal that the larger trend here is in fact down. All right, let's take a look at the euro pound. Same thing here like in euro USD. We haven't had any clear structure, and I'm thinking we have one more wave to go higher here, perhaps near 0726, 0727 levels. So this would then make a 5-wave structure out of the C wave, which is expected. So from the low of the B wave we can count waves 1 and 2, now 3, and forming wave 4, and perhaps now a move towards 0726, 0727, and then the next wave down can start. And at this point I think it's safer to start looking for trading opportunities on euro pound. I wouldn't trade this a move to the upside, since the upside is quite limited and the price action is not confirming that we would get a move as high as that. So there is a potential here that we are not going to get any upside, that this has already peaked. I have labeled this minor wave 2 ended at the last high, but the price action now is telling us that there is going to be probably one more move to the upside. But once we see this corrective wave finished, then we can start to think about trading euro pound to the downside. All right, pound yen next. And here, same thing as yesterday. We traded this pair yesterday. I closed it as the price action looked a little bit corrective, but now I have a new trade here. So pound yen sell stop at 185.25, stop loss 185.77, take profit 181.8. We got some pips out of this yesterday, but nothing major. And now basically the same trade as yesterday. The target is at the 100% Fibonacci expansion line, and since we are dealing with the third wave down, we can expect at least the same length out of this third wave than the first wave. So I have my Fibonacci expansion tool here now on the correct end at 186.220. So this is measuring the relationship of this first wave and the third wave that is now forming. And this 100% line is the place, is the level where this third wave would be equal in length with the first wave. So this is usually the case that the third wave is at least as long as the first wave. Also, if the wave count here is incorrect and we are dealing with the ABC structure on these sharp zigzag corrections, which should be forming here if this is ABC structure, the A wave and the C wave would be equal in length as well. So in either case, the 100% Fibonacci expansion is quite good target for this trade, and this is where we have our take profit level. Okay, that's all for today's video. Visit the show notes at ForexDayBreak.com/84. And again, let me remind you that you can get this video analysis, daily trading signals, weekly future trades video, books, and access to my trading system when you subscribe to my basic membership. Membership fee is only $10 a month, and I have a 14-day free trial for you to test out my service. You can cancel with one click, so this is truly a risk-free offer. Go to ForexDayBreak.com/basic and sign up today. More trades tomorrow, happy trading, and I will see you next time. Bye-bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.ForexDayBreak.com. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.